Welcome back to Traders Corner, the trading show that tells it like it is. As always, I'm joined by Garth McKenzie, who is, of course, the founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, at the beginning of the year, the market sort of got out of the blocks with a bounce, but I get the feeling that trade has been a bit frustrating in the last couple of weeks.
Yeah, it certainly has been. It's actually been very, very range bound over the last, certainly for most of January, actually. I mean, I was looking at it this morning, and for the most part, our all-share index has really traded within a 500-point range for pretty much the whole month, and we're now 3 weeks into January. So a market that trades in such a tight range is a little bit frustrating. We generally are used to a little bit more volatility than that. 500 points on an all-share index that's sort of, or top 40 index that's around 36,000. 500 points is about 1.5%. Which is a pretty tight range for us to be tracking. So I found it quite frustrating, and I think any other traders that out there that have also found it frustrating don't feel alone, because it actually has been a bit annoying, the lack of volatility.
Well, you have actually traded a share for the portfolio today, but before we get to that, let's have a look at the broader picture, and starting off with the top 40 index.
Yeah, well, I've got a chart of the top 40 index up here just to put it in, look at the bigger picture and understand where we are in the bigger scheme of things. I mean, we still have this nice steady upward channel in place on our market. You can see it goes back to July last year, and each time the market's pulled back to the bottom of that channel, it's found support and it's moved up. Now, we've been bumbling along at the top of that channel over recent weeks, basically for the whole of January. We've got this more sort of steeper upward trend that goes back to into the middle of November. And we're sort of testing that support, possibly breaking it. It's difficult to say at the moment which way this market wants to go. But that circled area over there is what I really want to point out. I mean, that's what I was just referring to now, where that's predominantly January's trade, and we've really been going sideways within a 500-point range for the whole of January. And that has made things a bit frustrating. Now, where to from here? I don't know. There's a possibility that we might go back down to the bottom of the channel, which comes in at about 34,600. But there's an equally good chance that if this is a sort of a sideways consolidation and we're not going lower, then there's a good chance that we possibly pop out the top of this consolidation and break higher. So time will tell. I don't know which way it's going to go, but certainly I'll be watching this eagerly. What I will say is there definitely does appear to be support for our market at the lower levels. And if that is the case, then one might argue that we've got a likelihood of a pop out through the top of that range. But let's see, time will tell.
Guys, last week you isolated 5 shares that you would consider trading, and this happens to be one of them, and it's Aspen, a share that you did very well out of last year.
Yep. Yeah, this is what we're trading for the week, and I'm going to look at 2 other shares that have also caught my eye recently as well after this. But this is our trade of the week that we're getting started with the portfolio for this year. And it's a relatively conservative start to the year, as you'll see. But let's just look at the chart of Aspen quickly and dissect it. As we know, last year it's been a very strong performer. It's in a strong sector, and it's been one of the strongest stocks in the market. And regular viewers will know that to me is the type of stock we really like to trade on this show. We like to look for stocks that are in strong sectors and that are relatively strong in their sectors, and then wait for those stocks to either consolidate or pull back, and then look at opportunities to try and time the entry to get on board. That to me is what makes a high probability trade. So looking at this Aspen chart, I think we do have the makings of a high probability trade here. If you look at it, you can see that we've got a very nice steady upward trend which goes back to August of 2011. And every time the stock has pulled back to that uptrend support, it has found support. The buyers have come in and they've taken the share price higher. Also notice that gold or orangey colored moving average on the chart there, that's a 50-day moving average. And again, you can see each time the stock has pulled back to the 50-day moving average, it's found support, and it seems to have moved up off of that level. So that encourages me. We also have a lateral support level there at about 160 Rand, which you can see basically joins all the tops through October, November, and into December of last year. And the stock has now pulled back to that 160 Rand level. So if you zoom in on that area, that rectangular area that I've pointed out there, I want to just go in and have a closer look at the trading action on a more recent basis. And there it is. So what you've got there is you've got our support level at 160 Rand. That's the lateral support. So in other words, that level acted as prior resistance through November and into December of last year. Now, a previous resistance level like that very often will act as support when the stock pulls back again the second time to retest that, which we've seen lately. The stock did pull back down to about 160 Rand in the past week, and it seems to have held that support. You've also got the rising upward trend there, which I mentioned going back all the way to August 2011, comes in at the same sort of level. And there's also our 50-day moving average, which is that orange line there. So to me, that all looks good. Also notice the stochastic oscillator on the top there. It's very oversold now, which is a bullish sign considering that the stock is in a rising trend. So to me, this stock ticks a lot of the boxes in terms of what constitutes a high probability trade. And to me, it looks like a reasonably good one to try and get off the mark with for this year. So I've bought for our portfolio yesterday at 165 Rand a share, and I'm setting a stop loss at 159 Rand in this case. So the stop loss is relatively loose. It's a convincing move basically below the support that we've recently seen on this share price. If we were to go down and breach 159 Rand on the lower end, then I would possibly need to concede that I'm wrong on this. But technically it does look good. It does appear that the support at around about 160 has been acknowledged. And the other thing I like from a fundamental perspective, besides all the good news around Aspen and the growth and all the stuff that we've spoken about on this show many times before, they typically come out with a trading update during February for their interim results to the 31st of December. So we're now heading towards February, and there's a possibility that we're going to see a trading update come out if their earnings are likely to be more than 20% stronger, which the forecast certainly indicates that they are.
So you'd say the share will trade up until that trading update, in which case you generally see a bit of profit taking place?
It can happen that way. But I kind of get the feeling that in addition to the technical setup that we've got here, there's a likelihood that the share could be quite well supported leading up to the trading update. So I've made the case here for why I believe this is a high probability trade. Obviously, we've then got our risk management in place and our stop loss in case my analysis is wrong.
Okay, well, take us through the mechanics of the trade in greater detail.
So I'm buying it at 165 Rand, as I mentioned. Our stop loss is at 159 Rand in this case. That means that the risk per share is 6 Rand. I'm risking 1.5% of our capital in this case. So bear in mind we're starting afresh with 250,000 Rand of capital. So 1.5% of that works out at 3,750 Rand. So that's basically the amount of money that I'm willing to lose if our stop loss gets hit. So we take it through the calculation as we always do. I divide the portfolio risk, divide it by the risk per share, and it leaves us with 625 shares that we can effectively buy, which is the equivalent of 625 CFDs. So that's what I've bought for the portfolio this week.
But Garth, if it is such a high probability trade, you said it ticks a lot of boxes, why are you only risking 1.5% of your capital? Because you normally risk 2% on trades that you consider to be trades with fairly good outcomes.
Yes, no, that's correct, and it's a good observation. I suppose my answer to that is we're trying to get off the mark here. This is the first trade of the year. And I know I love my cricketing analogies. So, a batsman comes out to bat, he wants to try and get off the mark, get a few runs on the board before he starts swinging for the fences. And that's, I suppose, the approach that I'm adopting here. I'm taking a relatively conservative trade in this respect. I'm not applying the maximum risk that we would normally to this trade. I want to try and get some runs on the board. I want to try and get a bit of profitability under our belt before I start taking bigger risks.
I wish I could carry on with the cricketing analogies, but I'm afraid you find me woefully deficient in this regard. Garth, are you targeting a particular level though? So if the share, because it did actually ratchet up to about 175, 176 Rand, is that kind of the level where you might look to take some profit?
Yeah, look, the prior top at 176 Rand would certainly be an initial target. But remember also what I said last week about wanting to try and get better at running the profits this year. So I'm going to see when it gets to that level. I might look to bank some of the profits or I might not. But to me, the trend is your friend with this stock. And remember last year with Aspen, we left a lot of money on the table by selling too early. So I just want to be a bit cautious about doing that this year. If it's possible to run the profit a bit longer than that, then I might do so. But let's see when it gets there.
Okay, so that is the trade that you've enacted for the portfolio, and then there's two other shares that you want to highlight as possible trading ideas this week.
Yeah, I just want to point these out. Last week we spoke about the different sectors in the market and we looked at some of the stocks that are looking good. One of the things I do think that this year we need to possibly be a little bit more cognizant of is the possibility that the resources sector might be coming back into favour. It certainly has performed fairly well over the last 3 or 4 months. Remember last year we largely shunned the resources sector because it was a major underperforming sector of the market. But there's certainly evidence to suggest to me that the resources sector is coming back into favour, and that it might possibly take the leadership role in terms of a outperforming sector in the market this year. So if that were to be the case, there's a couple of shares that I think we should be watching. I'm a big fan of looking for the strongest shares in the sector to possibly trade. And 2 of them are African Rainbow Minerals and Kumba Iron Ore. So this is the chart of African Rainbow Minerals, and what really gets me interested here is that we've got this major overhead resistance area at 198 Rand a share. You can see how many times the shares popped up and tested that resistance level over the last year and a half without being able to break through it. But we've got a nice steady rising trend over here over the last 4 months or so. To me, it looks like the share's consolidating underneath this resistance here. It's allowing the stochastic to sort of work off this overbought condition. And in my opinion, I think there's a chance that this share is sort of revving its engine, getting ready for a breakout through that resistance line. Early days yet, but if we were to get a breakout through that 198 resistance, then I think there's a good chance we're going to see quite good gains out of this stock. The other thing that interests me is that we had a big inverted head and shoulders pattern, which played out for pretty much the whole of last year. And you can see the neckline there came in at about 185 Rand a share, and we've broken above that. But typically what you do with these inverted head and shoulders patterns is you take the height of that head structure and then you project it out from the neckline, and that gives us a target of about 240 Rand a share. So I think the thing to watch here is look for a break above 198 Rand. If we get that, then I think we're on our way. You'll see good gains out of this stock, possibly up to that target of 240. So this is one I'll definitely be watching in the weeks ahead.
Okay, so that's African Rainbow Minerals. What about Kumba?
Yeah, Kumba Iron Ore, obviously in a similar space to African Rainbow Minerals. And this is a stock that's recently been making new all-time highs, and it's now been consolidating over the last 2 or 3 weeks. We've got a nice steady upward trend there going back to the September lows. And we've also got quite a clear inverted head and shoulders pattern here on Kumba as well. So that also could project up quite nicely to further gains. What I like is that we've got this very controlled consolidation happening over the last few weeks. The shares pulled back to this upward trend. The support there comes in at about 570 Rand, and we have noticed the buyers have been acknowledging that support level over recent days. Also notice how the stochastic oscillator there is starting to move down off of the overbought levels and sort of into more neutral territory, and it might even start to become oversold soon. So this to me looks like quite a nice trading opportunity. I think to buy somewhere in the 570, 580 Rand area, maybe put your stop loss down underneath 560, somewhere like that. It looks like a good prospect to me.
Okay, so 2 shares to highlight, in addition to a couple of others that you highlighted on the show last week. So given that it's we've only got 1 trade going, what does the portfolio look like?
Yeah, it looks like this. So we long 625 CFDs of Aspen from 165 Rand. So we ever so slightly down on the portfolio, and that's really because of the transaction costs that we incurred to buy this position in Aspen. We've yet to get off the mark, but that's certainly the first shot that I'm playing in terms of 2013. So let's see how it goes.
And guys, just before we get to the courses, is there a degree of nervousness? You did really well last year, so do you think maybe you want to start off and you want to start off right? I mean, can that be a little bit of an inhibiting factor?
Yeah, there is a little bit of nervousness, I guess. The level of expectation is very high, and I've seen a lot of people who have been emailing me and saying, we've got our 250,000 Rand ready and we want to follow you, and that's great. But it does put an extra little bit of pressure on me. So I want to make sure that we get off to a good start. At the end of the day, I'm going to follow the same principles that worked for us last year. Not every trade was a winner last year. Not every trade will be a winner this year. But I think if we continue to follow the principles that we employed last year, we should do well. Yeah.
And just very quickly to end off with, those are the dates for the upcoming courses.
Yes, so we've got one in Johannesburg on the 2nd of February, and then I've added 2 more, 2nd of March in Johannesburg as well, and the 9th of March in Cape Town. So anybody that's interested in attending these courses can get hold of me, garth@traderscorner.co.za, or find me on Twitter or on Facebook. and I will send you the information.
Okay, great. Garth, we have to leave it there. Thanks as always for joining us.
Thanks.
That's Garth McKenzie, founder and editor of Traders Corner.